PayPal stock, ticker symbol PYPL, is down 66% in the past 5 years, so I am going to do an in-depth analysis of the company by looking at the financials, the forecast, the balance sheet, using my discounted cash flow to calculate the intrinsic value of PayPal, as well as looking at the main risk of investing in this company. Starting with their financials, if we take a look at PayPal's revenue, it has grown very nicely over the last 10 years, growing from $9 billion all the way to $32 billion currently. However, their revenue growth has slowed down in the last couple of years. In fact, if we take a look at the revenue growth percentage, PayPal used to grow between 15 and 20% revenue annually, and now it is growing between 4 and 8%. And if we take a look at the financial forecast, analysts have PayPal growing revenue at an average of 6% in the next 5 years and reach $42 billion in 2029, so still growth expected. Now let's move on to profit. Their net income has grown also very nicely from $1 billion 10 years ago to $4.6 billion currently. And one thing that I like about PayPal is that it has even more free cash flow. As you can see, they currently have $5.2 billion in free cash flow, even though they took a hit from last year. Moreover, PayPal has fantastic margins as their gross margin is currently at 40%. Their profit margin has been between 13 and 20% in the last 10 years, and their free cash flow margin has been even higher at an average of 20% in the last 10 years, and it is currently at 16%. And analysts believe their profit is going to keep growing as they have EPS reaching $8.43 per share in 2029. So I think it's fair to say that PayPal is not a dying company and still has a lot of growth expected. One last thing that I want to mention about the financials is the number of shares outstanding. As you can see, they have been heavily buying back shares in the last couple of years. This is super positive for investors as you are owning more of the company and you are sharing the profits with less people. In order to calculate the intrinsic value of PayPal, I use my discounted cash flow and net income model, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value is between $69 per share and $170 per share. This also means, because the stock is currently trading at $65 per share, that if my low assumptions occur, you're going to make an 11% annual return on your money, middle 20.5%, and high 29.4%. So huge returns according to my assumptions. And I believe they are very fair as they have the company growing revenue between 4 and 8%, which is what analysts have them doing, averaging a profit margin and free cash flow margin between 12 and 20%. I assigned a P/E price to free cash flow at the end of the 7 years of 15, 17, and 19, and I assume they buy back 2% of their shares annually. If you want to make your own assumptions, I'm going to leave a link in the description below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, PayPal is currently trading at a forward PE of 12 and a price to free cash flow of 11, so I think it's fair to say that PayPal is trading cheap. And they also have a very good balance sheet with $10 billion in cash, which I hope they use to buy back shares. And they have $12 billion in debt, which is not a lot for a company that has a market cap of $62 billion. Now, in my opinion, the only risk about investing in PayPal is competition, because there are tons of companies in the fintech space. However, I believe PayPal remains the benchmark for trust in terms of transactions. In conclusion, I believe PayPal is a great buy right now because it is heavily discounted. I believe the market has heavily overreacted, and I think it still has a lot of growth potential. I hope you found this video valuable. Let me know what you think about PayPal stock in the comments, and I'll see you in the next one.